Hey, what's going on guys? This is Kedar here, and today in this video we have got the latest update on Fed's interest rate hikes today, also the current mortgage interest rates, and looks like the Fed's interest rate hikes are increasing the cost for prospective home buyers. And speaking of the current national mortgage rates, as of September 27th, looks like the rates are keep climbing. So ultimately what it boils down to, will the spring and summer 2023 finally be a good time to buy a home? And well, we have got 30-year fixed mortgage rate solid data figures. We will check out interest rate today, 30-year fixed mortgage rates today, and we will check out mortgage rates for September 27, 2022. We will check out 30-year fixed mortgage rates, also 15-year fixed mortgage rates, jumbo mortgage rates, and 5-1 ARM rates. And all this in order to figure out where are the mortgage rates headed over this year, and what is annual percentage rate and why it is so important. We'll figure out what are the mortgage rate trends are following right now, and how you can find the best mortgage rates, what is a good loan term, also some of the very important expert opinion. So today in this video we have a lot to talk about rising Fed interest rates, interest rate hike, Fed rate hike, and how that affects the mortgage. We have a lot to cover in this video. So before we start this video, make sure to check out our channel for latest financial updates, and make sure to subscribe to our channel with bell notification turn on. That will keep you posted on latest updates. Make sure to smash a like for me, and with that being said, let's get right into the video. And well, a few significant mortgage rates saw an increase today, and as for the data that we got, there have been a steep gain in a 30-year fixed mortgage rates and also in the 15-year fixed mortgage rates. Both of these rates cruised higher as well. Also, the average rate of the most of the common type of variable rate mortgage and the 5-1 adjustable rate mortgage also cruised higher. And now that mortgage rates have been increasing consistently since the start of the year 2022, following in the wake of a series of interest rate hikes by Federal Reserves, we can clearly see that interest rate hikes are dynamic and unpredictable, well, at least on a daily or weekly basis, and they respond to wide variety of economic factors. But the Fed's actions designed to mitigate a high rate of inflation and having unmistakable impact on the mortgage rates. So well, if you are looking to buy a home or you are trying to time the markets, well, these changes might not play into your favor if the inflation continues to increase and the rates continues to climb. It will be definitely likely to translate into higher interest rates and steeper monthly mortgage payments. As such, you may have a better luck locking into a lower mortgage interest rates sooner rather than later. No matter when you decide to shop for a home, it's always a good idea to seek out multiple lenders to compare their rates and the fees and find the best mortgage rates for your specific situation. And the current average rate on a 30-year fixed mortgage is 6.85% compared to 6.39% a week earlier. And for our borrowers who want a shorter mortgage, the average rate on 50-year fixed mortgage is 5.95% up to 0.25% from the previous week. And if you want to lock into a lower rate by refinancing, you need to compare your existing mortgage rates to today's refinance rates. And looks like buying a home right now may feel like a far-fetched dream for many Americans, but the good news is it could be on the horizon coming this spring 2023. However, it comes as the expenses of the bad news for the economy overall, as the economic volatility further seeps into US real estate market. We can clearly see that housing activity is fading very fast, and that's because inflation and the interest rate hikes have dampened affordability for many, and this downturn had led to a decrease in home sales and ultimately home prices. An expert Ian Shepardson, the chief economist at research consultancy Pantheon Macroeconomics, says the plunging trends in sales has further to go. And if home sales were fall further, Shepardson believes that US home prices could take an even steeper change. That could mean buyers could see greater affordability returns to the market, and very low level of inventory means that a headlong collapse in prices is unlikely, but we still expect a total decline of up to to 20% by the middle of the next year, as said by Shepherdson in the research note published last week. Also, play in the housing market, mortgage rates are dynamic, and the Federal Reserve's most recent hike, which was the third of the 5 promised consecutive hikes, and this Fed hike led to a rapid increase in mortgage rates, and they have helped to push housing affordability to 3-decade low. And according to the mortgage finance giant Freddie Mac, the average rate is on a 30-year fixed rate mortgage has climbed 6.29% last week, and well, that is more than the double levels seen in the year 2021 and nearly 3 percentage points higher than compared to the benchmark rates stood at the end of last year. And Sam Ketter, the Freddie Mac's chief economist, told that impacted by higher rates, housing prices are softening a little bit and home sales have decreased. But the increase in mortgage rate is coming at particularly vulnerable time for housing market, as the sellers are recalibrating their pricing due to lower purchase demand, and this will be likely resulting in a continued price growth deceleration, as said by Ketter. However, despite the possibility of 2 more additional rate hikes in the year 2022 again, there is a chance that mortgage rates could come back to earth, and that all hinges on a possibility of a larger economic recession. Given that the weaker outlook for economic growth, the Mortgage Bankers Association estimates that there is a 50% likelihood of a mild recession over the next 12 months, as per the Forbes reports. And according to the organization researchers, if the recession were to be materialized in the first half of the 2023, then the mortgage rates would fall around 30 basis points from the baseline forecast level of 5.2%, and that means the rates are likely to return to the levels seen during the early months of the year 2022 when the 30-year fixed rates hovered around 4%. And this is combination of cooling prices and declining mortgage rates, which could indicate a typically busy real estate seasons of spring and summer could ring in a more affordable housing market in the year 2023. And speaking of the mortgage rate trends, though the mortgage rates were historically low beginning of year 2022, well, they have been increasing steadily since the Federal Reserve recently raised the interest rates by another 0.75 percent point. This is an attempt to curb the record high inflation, and the Fed has raised rates of total 5 times this year, but the inflation still remains to be high. And as a general rule, when the inflation is low, mortgage rates tends to be lower as well. And when the inflation is high, the rates tends to be higher. Though the Fed does not directly set mortgage rates, the central bank's policy actions influence on how much you pay to finance your home loan if you are looking to buy a house in 2022. So keep in mind that Fed has signaled it will continue to raise rates, and that's why the mortgage rates could increase as the year goes on, and whether the rates follow their upward projections or begin to level out or may probably hinge on inflation if that actually slows down. And speaking of the today's mortgage interest rates, as of September 27, 2022, currently 30-year mortgage rate is 6.72%. In the last week, it was 6.33%, about 0.39% change. Speaking of the 15-year fixed rate, currently it is at 5.86%. In the last week, it was 5.62%, and that has increased by 0.24%. And the 30-year jumbo mortgage rate is 6.73% currently, and in the last week it was 6.31%, and it has increased by 0.42% overall. And last but not the least, 30-year mortgage rate refinance rate, currently the rate is 6.75%. In last week it was 6.32%. Finally, it has increased by 0.43%. So well, how can you find the best mortgage rates? Well, you can get a personalized mortgage rates by connecting with your local mortgage broker or using online calculator. Make sure to take in account your current finances and your goals when looking for a mortgage, and the specific mortgage interest rates will vary based on the factors including credit score, down payment, debit to income ratio, and loan to value ratio. And therefore, having a higher credit score, a higher down payment, also a low DTI and a low LTV, or any combination of those factors can help you get a lower interest rate. And the interest rate isn't only the factor affecting selecting cost of your home, you need to be sure to consider other factors such as fees, closing cost, taxes, and discount points, and be sure to shop around with multiple lenders, including credit unions and online lenders in addition to the local national banks in order to get a mortgage that is best fit for you. So well, what is a good loan term? So when picking the mortgage, it's very important to consider a loan term or a payment schedule. The most common mortgage terms are 15 years and 30 years, although a 10, 20 and 40-year mortgage also exists, which is another important distinction between fixed rate and adjustable rate mortgage. For the fixed rate mortgages, interest rates are the same for the life of the loan, and unlike a fixed rate mortgage, interest rates for adjustable rate mortgage are only fixed for a certain amount of the time, usually most frequently 5, 7 or 10 years, and after that the rate fluctuates annually based on the current rate in the market. One thing to take into the consideration when deciding between a fixed rate and adjustable rate mortgage is that the length of the time you plan on living in your house. For the people who plan on living in long term in your new house, a fixed rate mortgage may be the best option, as the fixed rate mortgages offer more stability over time compared to adjustable rate mortgages. But the adjustable rate mortgages may offer lower interest rates upfront. However, you might get a better deal with adjustable rate mortgage if you only plan to keep your home for a couple of years. And there is no best loan term as a general rule. It all depends on your goals, your current financial situation, and it's important to do your research and know what's most important for you when choosing your mortgage. And there it is, guys. That sums up all the details. I hope you got a clear picture on this. So what do you think about this? Do let me know in the comments down below. Also, don't forget to check out other videos from our channel. Do subscribe to our channel with bell notification turn on. That will keep you posted on latest updates on finances. Thank you so much for watching this video till the end. And this is Kedar from How to Guys signing out.